All right, what's going on, you guys? So, I was looking through this article. As you see this article on cryptopolitan.com. Jamie Dimon warns of a U.S. recession despite recent pullback in tariffs. So let's see what they say. So, JP Morgan Chase CEO Jamie Dimon said that a recession was still possible in the country. The CEO cautioned of a recession a week after the U.S. inked a trade agreement with China in Geneva, Switzerland. Dimon said the rollback of tariffs between the U.S. and China was the right thing to do. Okay, cool. But yeah, there's a lot of interesting stuff in this article. You can check it out. But yeah, Dimon noted that he would defer to economists at his bank who gave a recession at a 50% chance of happening. JP Morgan's chief economist, Michael Feroli, said on Tuesday that the outlook for recession was still elevated. The economist also added that the outlook was below 50%. But let's take a look at what we got going on here. I think the overall necessity that we need is for the interest rates to be cut. So we had CPI coming at a good reading, better than expected on Tuesday. Then we had PPI come in at negative, which is much better than expected yesterday. So CPI, Consumer Price Index, which is the regular inflation rate people look at. PPI is the Producer Price Index, which is the cost that it costs producers to produce things, which is like a lagging indicator of the CPI for the next month. So based on this, CPI for the next month should come in lower, but it all depends on what happens with the price increases that might come from tariffs, right? Yesterday, Walmart said that their price increases are inevitable at this point, so we'll see. But just today, at the time of this recording, just like a half hour ago, we had some negative numbers coming in. Housing starts, which is red, but it's not that bad because look, prior was 1,339,000. Expected was 383. Actual was 381. So it's lower than expected and better than prior. But building starts is a little bit lower. So, I guess it just indicates a slight economic slowdown. But overall, what we need is inflation to go down because for the most part, when the Fed needs to choose between economic slowdown and lowering inflation, they're going to choose lowering inflation by any means possible, any means necessary, because they don't want stagflation, which is inflation plus a recession. And so that's probably what they're going to look for. So fingers crossed that inflation keeps going down. So we're doing good there. But I want to say awesome. What I'm saying is hold the line because things are looking good when it comes to global M2. It's really pumping. It's just an indicator that Bitcoin is probably going to be pumping along with the entire crypto market. And if this chart is true, we seem to be right here. And I guess right about here in this dip right here, because this chart, this is from Colin Talks Crypto. And he posted this, just 5 days ago, right? So I guess we saw the last 3 days, we saw the red that might have been predicted in here. But there has been some bad news, like I said, with Walmart now. But today is a little bit greener than I expected. I expected at least another fully red day, but it is greener than expected. But overall, I think that overall everything, the outlook is very, very bullish. Things are very bullish, at least with crypto. We might see some sort of economic slowdown. Crypto is probably going to be pumping. Bitcoin is probably going to be pumping in the next few weeks, the next couple of months. And then all this stuff about the recession is going to kick in and we're going to pull back probably in August or something like that. Who knows when, but we'll try to see. But at least for the next few weeks, things are looking good. I think what I want to say is hold the line, no FUD. Oh, I think I just saw a refresh with a bunch of more circles turning green. But no FUD. I guess what you got to do is you got to get a good strategy in place. You have to know when to buy, know when to sell. When it comes to selling, you have to sell at the top. Don't keep on holding all the way through and then it comes crashing down, because all that does is it demoralizes you for the next run up, right? But when it comes to buying, DCA your way in. When, like I say, if you have like only $1,000 to spend, right? Don't just lump sum that in at a certain point. Just spread it out. You know, divide it by 10. Do $100 each buy. You know, every day or something like that. Buy on the way down. 100, 200, 300. Keep on buying on the way down. And if you get to the bottom, and you've only spent $800, and it starts going up, you know, okay, you didn't spend that $200, but you're better off doing it that way, because if you had put in $1,000 up there, right, and you know, you would have not bought down there, so you're better off than you would have been if you had done it the opposite way. So yeah, you gotta get a strategy forward. It's not only about making money. It's about being confident and not doing something that's going to cause yourself to be demoralized and just want to just quit and just, you know, just pull out of the game, because that's not what you want. But yeah, I mean, I just wanted to make this quick video, these updates, because this just came out. These numbers just came out. I was surprised to see that this was you know, a little bit greener than expected, and so on. All right, you guys, check out those links in the description. Click that like button and subscribe if you haven't subscribed, and I'll catch you later.